Hello everyone and welcome to Trading Step by Step course. And in this complete course, I will walk you through how to become a successful trader practically. But now before I get into the different steps of how to do trading, I would like to first make you acquainted with what exactly this term trader means. Now in stock market, there are two kind of people who invest. One is a trader and the other one is a investor. Now let's first start with this investor category kind of people. An investor is a person who is more of a long-term guy. When he invests in a company or a stock, he looks into fundamentals like balance sheet of the company, what kind of people are there in the management, and lot more other details. And normally investors, hang around with the stock, like around from months, to years. The other kind of people are traders. Traders get into a stock or a company for a short time, must be like from 3 to 7 days. Traders do not look at fundamentals of a company. They are least interested in balance sheets, or who is running the company. In other words, the management of the company. They believe in chart numbers like price of the stock, volume of the stock. They look at technical charts, watch for signals. They enter the stock. They make quick profits or must be losses and exit out from the stock. In simple words, the theory on which traders run is technical charts. Their belief is that if the company is doing good, the first thing that should happen is the price should rise, right? If the management is good or if there is some kind of good news inside the company, the first thing that should happen is there should be a volume demand of that stock. So rather than getting into nitty-gritties of how is the management, what is their balance sheet, they just monitor the technical charts. They look at price actions, they look at volume actions, and then they enter the stock. Now this complete training here is revolving around traders. So in case you are an investor, must be this training would not be appropriate for you. So when I'm talking about learn trading step by step in stock market, I'm talking only about the traders. Okay, I'm not talking about for investors. So here we'll not be discussing on balance sheets or how to judge a management or profit and loss and those kind of things. We will be purely looking into technical charts, how to read it, how to interpret it, and how to understand when to enter and when to exit. Now traders also follow a life cycle when they trade in a stock. This life cycle is termed as trading life cycle. Trading life cycle is nothing but it's a series of steps which a trader follows in a trade. Now trading life cycle has 4 steps. First thing is scanning the stock, taking position in the stock, afterwards monitoring, and finally exiting the stock. Let's start with the first step in the trading life cycle, scanning. Scanning is the most important step, as this step drives the complete trade ahead. Any mistakes, on this stage here, can lead to problems in the later stages. So a good trader, he spends a lot of time, must be his evenings or, after market hours or before market hours or within the market hours. He spends a lot of time analyzing, scanning and concluding and picking the best stock on which he will trade. Scanning is a process, where the trader starts running through technical charts, looking for volumes, price actions, momentum, or any kind of news which is flashing around, and then making decisions. The outcome of this process is that you get the stock name, the entry level in that stock, in what levels you're going to enter. In case there are problems, what is the stop loss? And third, if you're talking about profits, at what level you want to book profits. So these 4 things are the outcome of this scanning process. Once he has decided which stock to enter, he knows the entry positions, he knows the stop losses and profit levels. The next step is to take position in the stock. So when the market starts, the trader actually opens up his own terminal, or must be he makes a call to his broker, whatever it is, whichever way he wants to enter the stock, and he enters the stock. So this is where he says, okay, he wants to buy this many amount of stocks, this is the investment he wants to do, and this is the level he wants to enter. So the second step after scanning is entering the stock. Now once the trader takes position in a stock, the next thing the trader does is monitoring. Now stock markets are extremely volatile, it's all about probability. So okay, you can look at the technical charts, you can look into volumes, you can look into price, but nobody can guarantee that you will get a profit here. So it's all about probability. So the trader has to be on his toes, when he enters the stock. So he will not only monitor the technical charts. A good trader will not only monitor the technical charts, but he will also go through news channels. If there are some negative news for the stocks, then probably he will act accordingly. Now, when a trader enters a stock, right, he has already decided, what will be his profits and what will be his losses in case there are bad times or in case there is a bad trade. So while he is scanning, the next thing what can happen is either the trade will do a profit or either it will do a loss. So the final stage of a trading life cycle is exiting the stock. So you can think about that this complete trading life cycle is divided into 4 sections. First one, you scan, you decide the best stock. Second one, you basically take a position on the stock. Third one, you keep monitoring after taking positions. And finally, depending on you get your profits or losses, whatever it is, you exit the stock. Now, before I wrap up this video, let me talk about 3 good qualities a trader should have. First thing, he should follow his stop loss like a religion. His stop loss and his profit levels are the areas or the boundaries, which he should never cross. See, at the end of the day, stock market is all about probability. So, if you're seeing that a stock is going down and it has already crossed his stop loss levels, then a good trader does not wait. He just exits the stock. So that is rule number 1. Second, a trader does not drag a trade more than a week. So you'll never see a good trader dragging his trade for years together. That's not possible, right? If he's doing that, then that's not trading, that is investing. And the final one, a trader should not be emotional. He should not be attached with a stock. If you look at investors, they stay invested in a stock for years together. So they know the management by name. They know where the company is located. But a trader looks at the technical charts. So he should only look at numbers, look at his stop loss, look at his profit levels and operate within that. So anything goes beyond those numbers, he should exit. So these are 3 golden rules a good trader should follow. So now this was video number 1, where I was trying to make you understand, what exactly are traders, what is a trading life cycle, and what exactly are investors, and what are the golden rules for traders. Now in the next video, in video number 2, we'll try to understand the first section in the trading life cycle, scanning. Thank you so much.